have consolidated households. Let's say you're a grandma and grandpa. You allowed your kids to come in with your grandchildren because they're having a tough time financially, right? So now everybody's consolidated in one household. Well, in this situation, you guys will come down, you buy your house, and then you can also help your children to put down on their home so they can have a different space. So it's you can get creative, right? But I just love this product because it can literally change people's lives. I mean, imagine if you didn't have a mortgage payment. What would you be doing with that money? You know what I mean?
Correct.
So it's an awesome product.
Correct. And if I may interject, I heard that as well. Sometimes, the elderly, they may have a lot of medical bills, a lot of prescription that they have to pay for, although they may have Medicare. But that's an extra funds that they could use to take care of those things. I even heard sometimes they say, hey, I'm at the end of the life. I'd rather go on vacation on cruises, right?
Exactly.
Go on cruises with the extra money than being worried about paying that mortgage every month, okay?
Absolutely.
I also heard that at the same time, the extra money that you actually saving yourself while he's holding on to it, right? You, especially with a line of credit. You could even ask and invest that money in something else. So for example, if you're worrying about your kids when you die over, and I guess you get to that, hey, just get a life insurance for them. Something that when you pass away, they have enough funds instead of them worrying about grabbing your house and putting them in an evil war, right, where they're fighting against each other. About that house belongs to me, it belongs to me. Oh, but I don't want to live in Florida. I'm from New York. All these issues that arises, right, when a family, when a parent passes away, that they could use those funds creatively and still enjoy their lifestyle at that time.
100%.
Exactly.
And the way that the loan is structured, it's where, as far as how long can they stay in the home and so forth, there's a lot of misunderstanding of the product. And again, we'll address that in a little bit. But I do want to say that the way it's structured, they give you up to 150 years old. So you're wondering, does this work forever? Yes. Literally, if you qualify and you get the loan, you're able to live your property for the rest of your life because it's already calculated up to you reach the age of 150. And then when you pass away, people think that the bank will take your house. It doesn't work that way. It works literally like any other mortgage. Whoever's the beneficiary, they have a certain time frame so they can put the property in their name. So that obviously they would have to qualify with a loan. If they don't qualify, then the only option at that point would be to sell the property and then you gain the profit. So
Correct.
It's no different.
Correct.
No different than any other mortgage product. And I know they have a bad rep. So that's why we're here and we're trying to fix that because this product can literally go a long way. And this also works for those who are currently, and it's the only loan that will help those that are currently going through foreclosure. You're about to lose your house, and they're giving you the opportunity to save it. So again,
and you can refinance it. You didn't want to mention that you can refinance as long as you have enough equity on the property.
absolutely,
Yes.
You can always get out of the reverse mortgage if it's not something for you.
Correct.
You can refinance a new one if
Right, so don't feel like they're stealing. Many people I heard, oh, they're going to steal my property. I'm not going to have anything for my kids to give. The best thing you could do, honestly, is get insurance. God forbid something happens. You give them the premium of that insurance, whatever they pay out.
Well, the beauty of that is that, because of everything that happened back in 2008, a lot of the loans that went bad were reverse mortgages. And I feel it's because people weren't educated enough. And today, well, this happened back in 2011 when they regulated all the loans, right? After everything happened, they went in, they regulated everything. So the whole situation will not happen again, even though I could think it could, but never to the extent that it was in 2008.
Correct.
And one of the main loans that were regulated was this one. I mean, when I tell you, I don't see nothing negative about reverse mortgage, I literally don't see it.
Right.
Currently, when part of the reverse mortgage now is that you pay mortgage insurance up front as part of your closing costs, and that's going to protect you if you ever go upside down.
Right.
So in other words, you're never going to lose. You're always going to have that extra protection.
Correct.
reverse mortgages were started in 1961, which happens to be the year I was born. I'm old. And basically it was designed by a guy named Nelson Haynes in Portland, Maine, and it was to allow the widow of his high school football coach to keep her house. When he died, she didn't have enough money to keep paying for the house, so he came up with this mortgage that she could stay in her house and not make payments, and that's where the reverse mortgage originated from. over the next few years, in the late '60s, they did, a UCLA professor did a actuarial study to figure out how they could do this and make money and protect elderly people. Eventually, Congress got involved, and then they turned it over to the housing HUD that handles the FHA. They made it an FHA product. They made that permanent in the late '90s. And so this is a fully insured loan, just like an FHA loan. It's guaranteed by the United States government, so that, like Jessica said, if for whatever example, say somebody lives to be 120 and the interest far exceeds the value of the home, well, they can't come after any assets or anything like that. The family can buy it at 95% of the market value, and then any difference FHA pays as the insurance. So it's really a foolproof loan. You can't, with the way it's regulated and everything, it's pretty hard to mess it up.